Welcome, my dear students. This is Dr. Osama Kashwa, your teacher, and today we are going to talk about how to get benefit or how to get use of the Excel program, how to benefit from Excel program in recording our balance sheet. First of all, we must know what the meaning of the balance sheet, and we had already lecture about what is the balance sheet. The balance sheet is a type of records that every organization, the accounting department, they should keep it. It's for recording all the transactions that is then done in the past, all the transactions that had been done in the past. And let me show you, just let me remind you back with what do we mean by the balance sheet. And here it is, like you can see it now in front of you on the monitor. Here is as example a balance sheet ended in December 31. Usually, in most the organization, the balance sheet is done for 1 year. So the balance sheet is containing what you own and what you owe, what you have and what is against you. Your assets is what you have. Liabilities is what you have to pay to the others. Okay, so this is what you own and this is what you have to pay to the others. The assets, okay, are always debits. So let's see what the assets consist of. Usually, if you start with the current assets, then there will be the current liabilities. So we have the current assets here, cash, account receivable, inventory, prepaid expenses, and investment. Then all this together will make the total current assets. As example, 100,000 plus 20,000 plus 15,000 plus 4,000 plus 10,000 will make 149,000. This is the current assets. Watch out that this is what you have, your own, but this is what you have to pay to the others, is liabilities. Okay, so once we start with the current assets here, on the other side, there will be a current liability. And here, when we talk about the fixed assets, there will be also the fixed liabilities on the other side. So we talk about the current assets and their sum is 149. Let's go for the fixed assets. Fixed assets consist of the land, buildings, equipments, less the depreciation. So this we call them the fixed assets. Notice that we deduct the depreciation. Other assets like intangible assets, like the name or the fame or the well-known or reputation of the shop, less accumulated amortization. So all this on the side of the assets. Meanwhile, on the sides of the liabilities, we have the current liabilities like account payable, notes payable, accrued expenses, deferred revenues. Those all will make 30,000 plus 10,000 plus 5,000 plus 2,000 will comes to 47,000. Also, we'll add to them the long-term debts, which is $200,000. Then that will be the total liabilities. Then we'll move into the shareholders' equity. The common stocks, 10,000, additional paid in capital, 20,000, and retained earnings, that are the earnings or the profits which the organization did not give to the workers or divide on the workers, but they keep the money for further investment. So we call it retained earning. Plus treasury stocks that will be deducted. So all this will come to 472 100,000. And we had already a lecture before today's lecture. I'm just saying in quick about what is the meaning of the balance sheet. And the balance sheet records all what you have and what you owe to the others in a particular moment. That's usually at the end of every year. And this balance sheet we use to make decisions based on the balance sheet numbers. So we can know, as example, the financial ratios, like what we will see. So it depends on the balance sheet. Also, I want to tell you that the balance sheet must be balanced. It's even from the name itself, balance. So like we see here, the total assets here, total assets for 72,000 will equal the total liabilities, which is also 472 and 100, the same number. So most of them, uh, they must be the same. How about if one of them became larger than the other? So if the assets are more than the liabilities, then we'll put the remain or the rest or the balance, we'll put it in the capital account. But if the the total liabilities are greater than the total assets, we said it must be balanced. So there will be a gap here. So the gap, we will put it in the intangible assets, will increase the intangible assets. So based on which is weaker, which is less than the other, the less we fill the gap with, if the less was here, we'll fill the gap with intangible assets. If the less was here, we'll fill the less with the capital. Now I will move after this quick presentation into the meaning of the balance sheet, into how to calculate the balance sheet through the program of the Excel. As you can see here, this is an opened spreadsheet, and this is just a template. I can do some changes whenever I want. Like we said here, on based on the Excel, here is A, B, C, D, E, F, G, H, like we said before. And this is also the numbers vertically, 1, 2, 3, 4. Then we said as example, the cell A5, A5, that it will be here, A5, B5, this is B5, and so on. C, in this cell, it will be C6, like that way. This cell, it will be D and 6. Watch out, even the colors are changed into the orange color. When I move from a place to a place, as example here, this is F, the cell F with the cell 6. Also, I can enlarge the cells and decrease it, widen or narrow it. Like when I use these arrows, I can widen it or narrow it. I can go back to the start point with Control Z, to which I started from, and now it's not brightening or shining, so that means this was the last operation done here. Well, now we want to know how we will do the balance sheet with Excel, with the use of Excel program. These are applications, which means ready-made. We said before, let us remember back, we have assets, we have liabilities. The only thing here that he's comparing two different years. Let's say here, I will write the year 2020, and this is to compare it with the year 2021. Now I will go for the cash. As example, let's say the cash was 10,000 here, and the cash was 11,000 on 2021. So I will put the inputs, and the program will calculate for me the total assets and the total liabilities based on, like I said. So account receivable, we'll say that the account receivable here were 8,000, and here they were 8,800. Inventory, the inventory here was 10,000. The inventory here was 11,000. The prepaid expenses, which is considered one of the current assets, the prepaid expenses, let's say it was 11,000, and here the prepaid expenses is 12,000. Then here we have short-term investment, 20,000, and this is as example 23,000. Okay, you will notice that the program itself calculated them, calculated them. So 10,000 plus 8,000 plus 10,000 plus 11,000 plus 20,000, all this will be 59,000. Likewise, 11,000 plus 8,000 plus 11,000 plus 12,000 plus 23,000 will give me 65,000. So if you want to know how did we calculate it, if you stop here as example, then you will say this is C11. On the cell C11, I will, if I want to write equals, then I will see the range from C6, two dots into C10, like I showed you before, like I showed you before. So here now we'll go to the second part of the balance sheet, long-term investment. Let me show this point again with another spreadsheet. I will show with another spreadsheet. So just to remind you, if I want to say here 100 and here is 200, the same idea, and I want now to collect those two together, so I will say equal, then this A3 equal uh, A1, then I print open these things A1 2 to the limit of A2. Then when I press enter, sorry about that, yeah, the brackets. So here is the brackets. Now I will press enter, or I can do it by the function itself. Like I will do equals sum sum. Here is the sum. Then A1, here we go, A1 to A2, A2. Then I will close the brackets. Then I will go to enter. It gave me 300. The same idea which we do here is the same idea which we are doing now in our balance sheet, in our Excel sheet, on that template which I showed you. So like if you want to say now, this is C11 equals sum from range C6 two dots to C10. Then this will give you C11, will give you the sum of them. Likewise, the same thing here, 11 plus 8 plus 11 plus 12 plus 23 will give me 65. So all those were the total current assets. Now we'll move on to the fixed assets because we said the balance sheet consists of the current assets and fixed assets and other assets. So the second part will be the fixed assets. Now we'll move on the long term, like we say here as example, 100,000, let's say. And the equipment are 50,000. And the accumulated depreciation is 10,000. And by the way, I talked before about the depreciation, and I said the depreciation is the gradually decrease in an asset's value. The gradually decrease in an asset's value. Then what you suppose that it will give you when I say I will keep the intangible assets now because still I don't know, or let's say I will give it a number as example, 10,000. Here I will do the same likewise. I will say 120,000. I will say here 200,000. I will say here the depreciation is 5,000. And I will say the intangible assets here are 12,000. Though I want to leave the intangible, but it's okay. Deferred income tax. How about the deferred income tax? I will say 120,000 here, and here it's 15 or 123,000. Here others are 20,000 and 20,000. Perfect. So also he collect for me the total other assets. So all of this now comes to 261, while on 2021 it was 365. All I did for the assets, I will do exactly for the liabilities. So to compare these 2 years also, I will say this is 2020, year 2020, and this is year 2021. Then I will go same thing. Okay, dokie. Let's just say here the account payable was 9,000 and they became here 10,000. And the short term loans were 8,000 and here it's 8,900. Here we say the income tax payable was 11,000, there which is 11,100. Same thing for the accurate salaries and wages. It was, let's say, 11,200. Here it is 11,500. Unearned revenue, let's say it was 19,000. And here the unearned are 24,000. 24,000. Okay, current portion of long-term debt. This also will be, let's say, 58,000, and let's say here they are 66,000. Okay, dokie. You will find also that he calculated for you all with the same idea, the same function, which is the sum, the function of sum. And you can see here, if you want to make sure, look at where I am now. It's highlighted with this black frame. That's fine. That's fine. You can see here the function is saying sum from G6 to G11. Where is the G6? This is G. This is G6 here, from G6 to G11. And you find the numbers are written up in the function. I will come here back, sum from G6 to G11. So he's telling me that the function is sum, that I will add them together, 9,000 plus 8,000 plus 11,000 plus 11,000 plus 19 plus 58. I will add from the number which in G, this is G6, G6, this number, till, so I will put two dots, till G11. Here is G11, which is 58. So I will add all in between them, 9,000, 8,000. So same thing I will do here likewise. But look out now, because I changed the cell, so the numbers are also changed. Like now it is, if you see the location here, it is H what? H12. So H12, this is H12, will equal the sum from, starting from H6 till, from H6 till, the two dots means till, or all the range. So what is between brackets, we call it range. And the two dots is what is between the range between the numbers between the range. So here is between H6 and H11. That will give it. What I will do in them? Sum. What the meaning of sum? I will add them together. 10 plus 8 plus 11 plus 11 plus 24, and so on. Now the long-term debit, let's say it was here 100,000, make it 110,000, 101,000. Okay. Here I will make it 121,000. Then deferred income taxes, let us say here 10,000, the same. And here deferred income statement would say it's 20,000. Then others, I will keep others now for the moment. Owner's equity, let us say 110, let us say must be 13,000. And here it is retained earnings will say 22,000. and others, let us say 31,000. Uh, Here also, same thing will do 123,900. Here it will be 21,000. Here it will be uh, like, so here it will be 22,000. That's fine. So now we came into compare between both of them. To compare between both of them, we have the must be as long as the balance sheet must be balanced. So we have to look for the gap. Where is the gap? This is 2093, 293,000. This is 261. So if we calculated the gap between them, the number is here 293, 200, 293, 200 minus 261,000. 261,000. That will equals 32, 200. That is the gap, is 32, 200. Okay. I know that the gap must be filled out. So I need to fill the gap with this amount, The amount is 32, 200. The amount is 32, 200. No problem. In that case, like I said, which one? 32, 200. In that case, I will look for the, who is greater here? The greater is 2093, and the less is here. So I will come here, intangible assets, and I will add this amount. So the amount 32, 200 plus what was there was 10,000. Let me now do it 42,000, 42,000, 42,000, and 200, and check out how it will look now. Will it be balanced or no? Yes, it is balanced now. 293,000, and here is 293,000. Likewise, I will do for the same here. Okay, so it's 43, 439, 439, 400. So here the total liabilities is greater than the total liabilities here. So what I'm going to do, the same thing. I will check out the difference between them. 439, 400 minus 365, 365, 800. So I will do it with the calculator again. I will say here C, and I will say 439, 400, 439, 400 minus 365, 800. 365, 800. That will equal 736, $73,600. Okay, dokie. That means I have to add to the weaker part. So the weaker part here is intangible assets. I will do the same thing. We have already 12,000, and we'll add to them 12,000 to 73600. Let us go back to, we'll add to them 12,000, which was there already, and this will give me the intangible assets or the assets bill. So it should be 6585. It should be there 85600 to make a balance. That's what I will do now. I will put here In the intangible assets, instead of this number, I will put 85600. 85600. I'll check out the balance how it will be. Exactly, it became 439, like here 439, and for the year 2022 93 to 93 as well. So what I want to say here is that if the balance is sheet is not balanced, you will check for the weaker side. Which is the weaker side? The greater side and the weaker and the less, or the weaker side, like what we say. So the weaker or the less side, you will fill the gap. You will fill the gap with what? With the difference. How you will do that? You will say the greater side, like it was here, greater than the low, less side. Then you will take the gap and put it in the intangible assets. You will add it into the intangible assets. In that case, you will add it into the intangible asset. This will change and will make the balance sheet balance it back. So usually the accountants make their best to balance both the sides, the assets and liabilities. Like I'm telling you, if the gap was here, means here less, you put the gap in the intangible assets. But if the gap was here, means the liabilities is less, you will put it in the capital. You will put the gap in the capital. Thank you so much for listening, and we will see on the next video the income statement. Thank you. Stay safe. Take care of yourself. Have a good night.